And then the last activity that we looked at was running the entries through the income statement and the statement of comprehensive income as just a way to recognize a couple of things. How the statement of comprehensive income works is one of them, and understanding the account accumulated other comprehensive income or loss. That is an equity account that we haven't spent a lot of time in before 3402, so we're going to use these two journal entries to see how the retained earnings is analogous to accumulated other comprehensive income, but retained earnings deals with the income statement, and AOCI deals with the statement of comprehensive income. So the income statement, accumulates temporary accounts that are closed to retained earnings. The statement of comprehensive income also deals with temporary accounts, but these accounts are closed into AOCI. So retained earnings and AOCI act the same, but there are different temporary accounts associated with each one. So that's really the point of this activity. So we're going to start with this gain on sale, just a simple gain on the sale of an asset that is going to be reported in the income statement, and we're going to then look at an unrealized gain that goes through OCI. So this little draw it. We'll see if we can make this big enough to see. Oh, looks like we can, sort of. All right. So we started in class with the gain on sale, and we walked through where that would be on the income statement. And the one that I handed out had revenues, and then it had expenses. It had operating income here instead of expenses, which are on this Nearpod. And we put that gain on sale down here in the other income section. And you guys remember that's where you put gains in the other income section. Boom, boom. Okay, that's where that goes. This gain on sale. And we talked about the way that made my net income go up by $3,000. That's pretty straightforward. And we know that down at the bottom on the statement of retained earnings that I would have had like all my beginning numbers here. Whoops. Put zeros. They're not going to be zeros. They'd be whatever they were. Okay, so I don't know what they are, so I'm going to just put dollar signs. This is the beginning. Whatever this was. Except we know this one's a negative. Always, because it's treasury stock. Okay, so we know with this particular $3,000 gain, that's going to come into retained earnings through net income that comes down into the statement of retained earnings right there. That's how the income, things on the income statement flow to the statement of stockholders' equity and end up in retained earnings and end up on the balance sheet, right, through retained earnings. Okay, that's just a little review of how temporary accounts, such as this gain on sale, end up closed into retained earnings and end up being closed out for the income statement. All right, but here we're going to look then at the statement of comprehensive income, which is a new statement. I haven't looked at it before, but I want you to note how it's laid out. First of all, it has net income at the top, and then it has a section for other comprehensive income. And so this $3,000 actually flows through net income. So it's going to come into the statement of comprehensive income as part of the net income total. Okay, so the statement of comprehensive income does not list all the revenues and expenses separately. It just has the total from our income statement. Okay, so that would come in as our net income. Now, if you look back at the entries that we also had a unrealized gain on debt that goes through OCI. And so this is where that unrealized gain is going to show up. It's on the statement of comprehensive income. This is my unrealized gain, which I should have written before the number, but I didn't. Okay, that's my unrealized gain that we said goes through OCI. Net income plus or minus the OCI items gives me my comprehensive income for the period. So in this case, my comprehensive income is going to be $6,000, right? It's these two pieces. This $3,000 came from the income statement. This $3,000 came from other comprehensive income. Total comprehensive income is the total of those sections. Okay, so there's my comprehensive income. Now let's look at how the account on the balance sheet, AOCI, gets updated for this activity on the statement of comprehensive income. Okay, so now follow this with me. The net income, we already talked about, it gets closed into retained earnings. Okay, what happens on the balance sheet side is that the other comprehensive income, this $3,000 unrealized gain, it's going to get closed into AOCI. So on my statement of shareholders' equity, I'm going to have a line for the OCI items. Okay? Notice what I did not do. I did not put 6,000 on this statement as 6,000. I put it in its pieces. Its pieces come from whatever the net income is plus whatever the OCI is. Okay, that's what flows into the statement of shareholders' equity right there. Okay, so this is the balance sheet that captures the temporary accounts from the other comprehensive income, just like this is the balance sheet account that captures the temporary accounts from net income. All right, so that's what we did with that activity. Just showing how things flow in those statements. All right. Okay, some activities. On what other financial statement will you find each total on the statement of shareholders' equity? Yeah, this is just, we talked a little bit about the statement of shareholders' equity itself and the fact that you would find all of those accounts on the balance sheet equity section with the total that matches the statement of shareholders' equity total. The balance sheet totals match. The account other comprehensive income is a permanent account in the equity section that is updated at the end of each period to include the other comprehensive income items from the statement of comprehensive income. All right, I'm going to change something on this slide because I don't like the way it's worded. Let's call it the account accumulated. It's missing a word. Accumulated. Other comprehensive income. Okay, so AOCI is the balance sheet account. Lots of acronyms, I know. It picks up the OCI items are on the statement of comprehensive income. Okay, OCI is on the statement of comprehensive income. All right, that was it for this section. Retained earnings and accumulated other comprehensive income are similar in all the following ways except. All right, temporary accounts are closed into both of those. That is true. Both accounts appear in the equity section of the balance sheet. That is true. Both accounts can carry a debit or a credit balance, okay, but we might change their name. That is true. We talked about how if you have negative retained earnings, it's usually called an accumulated deficit. Dividends are closed into both accounts. That is not true. Dividends are closed into retained earnings only. All right, that's it. We're done.